Hey, what up? It's been a few days, probably a few weeks, but we're gonna go over something real quick, and I'm gonna break it down the daily time frame strategy. Again, welcome back to the stream. If you've been following me for a while, you know we do daily time frame swing trading. Also, we do futures as well. But for most people who have found me, they know I'm 100%. I know I'm really deep into the daily time frame strategy just because my previous job I had was military. I'm retired now, um, but that's where I made my transition into the daily time frame. All right, so I got a comment the other day, and we're gonna go over that. And I'm gonna show you here. I'm gonna exclude the names, but it hit deep because I know that feeling of where he's at. The losses, the doubt. I've been there, going from trading strategy to trading strategy. Um, and things of that nature, and just constantly trying to find something. As soon as I lose, I try to go to the next one, and wondering why on YouTube everybody's saying, "Oh, well, I make this type of money, I make that type of money, I made 600,000 in one day off a $10 account," all that good stuff. So this is why the stream exists. This is not just trading. This is the rebuilding. This is the slowing it down. We're trading off the daily time frame, where we use pending orders this time. The last strategy I showed you was market orders. This time is pending orders. No more chasing, no more stress. This is for the traders who want peace, patience, and a plan. Say that with me again: peace, patience, and a plan. So if you've been burned down by scalping or intraday trading, or you barely holding on, take a deep breath. You in the right room. Let's swing smart, risk small, and get funded, or use your regular your own personal funding. All right. Welcome to the battle room. All right. So uh let's move into this one. We're gonna go over here. We're gonna bring this up. So this was the you can see this. Where are the swing trading playlists? The playlist is linked below in the pinned comment. Scalping has killed me, or sorry, scalping has unalived me, not literally, and practically going back to a job with so much debt. All right. So we've all been there. I know we have. Let me get rid of that. And so this is what I want you to what I want you to do is I want you to look at this. Um, Go ahead and stop it. Do what you're gonna do, and screenshot this so that way you can have it from whenever you when you're looking at the chart. So we're gonna go over this real quick, like daily time frame trading strategy, swing trading, a simple yet effective trading method for swing traders using only two indicators, which is the 20-period simple moving average SMA and the 5-period ATR. Don't look at nothing else on the screen. I'm just gonna show you point blank period. All right, price breakout, wait for a price to close above the 20 SMA. All right, candle confirmation. All right, two full candles must close entirely above the 20 SMA. All right, buy stop entry. Place a buy stop at 20% of the 5-period ATR above the highest high of the two confirmation candles. Stop loss, set your stop loss 20% below the 20 SMA. All right, then you trail your stops. So we're gonna get into it. Make sure you stop it, and then you pull this up later. All right, so we're gonna get into. Let me move this up some so it's not in the way anymore. All right, so because some people get confused with the candles, so we're gonna do this. All right, so let's make this one smaller too. Let's make this one smaller. Let's see if we can make it smaller, the thickness, and we'll make it yellow so it's easier to see. All right. All right. So if you look right here, all right, we have the ATR, and all you got to do is go to, and I break this down pretty much in every one. SMA. All right. I use simple moving averages by stocks and box. All right. You click that, you come up. All right. You go to the first AMA or SMA 20, close. That's it. All right. And then we go from there. All right. Oh, I'm sorry. And then we're going to go to up here, ATR. Click ATR. It's going to come down here. Type the settings wheel, whatever color you want. All right, 5 RMA. That's what I use. And then chart. And then that's pretty much it. All right. You can see you hover over. If you hover over it, right, you see at the bottom left-hand corner. Well, oops. probably can't see at the bottom left-hand corner because, let's see if I can move this over. All right, you see the bottom left-hand corner down here? If you watch over, see this is one. Let's do our, let me find my handy dandy arrows. All right. So we got one, then we got two. And the reason why I said we changed the color, right? So we changed the color. Let me see if I can move this down here. All right, maybe right here. Let's see. Sorry, guys, my bad. All right, so hopefully you see that. All right. So if you look, you hover over this. This is the high to high. The reason why I said I kept getting sidetracked, the candles, right? It doesn't matter what color candle it is. It's whatever two closes above the highs of the high. This one could have been a sell candle, and this one could have been a bullish candle. All right, a bearish and a bullish candle. Doesn't matter. Whatever one is the highest of the high. All right, so if we look right here, we go to 86. All right, so you will do, where is my here we go. Let me go to boom, boom, boom. All right, all right, you'll do 20% times the 5 period ATR. All right, which this 5 period ATR is 86, right? That's 86. Let me move this up. All right. So that's 86. So basically what you do is, where's my calculator? Where's my calculator? Handy dandy cat. I don't think you can see it on the screen. Let me see if you can move it over. Nope, on the screen. So you do 0.20 times 86. That's 17.8. So this is what I do, right? I'll come down to, see this price range tool down here? You come down 1, 2, 3, 4, 5. See that price range tool? That's what I use. So I'll go up 17 pips. 17 pips right there. Let's just see how close we can get to 17 pips. 17 pips. All right. Above, 17 pips below. Right here. Let's not make it complicated. 17 pips below. And trust me, this doesn't work all the time. Sometimes it just, some pairs on the daily time frame, it don't work. You're going to win some, you're going to lose some. But some of them trades, you get out early so you don't take the full brunt of it. All right. You got 185 right here. You got 185 right here. All right. And then you're going to follow your stops. We're just doing it like this. You'll place a buy stop. All right. Right here. This is your buy stop. All right. Pretty plain and simple. All right. So let's go to the next candle. Let's see. All right. Nothing here. So this was actually placed on the 27th of May, right? Nothing. Comes down. You just let it ride. You just let it ride. You're not even in the trade yet. All right. Boom. Now you're in the trade. So you place the trade on the 27th of May. You entered on the 2nd. See, these one of the ones you just sit and forget. All right. Now, if it comes all the way back down here, do you know it's null and void? All right. If it goes and it starts trailing all the way, down here and breaking this low, breaking that low right here, then yeah, I got it. Use common sense. All right. Now you're in the trade. All right. Now you're in the trade. You let it run. So it's back. And right now with these bullish and bearish are the same color, you're not stressing really. Look at how you look at this. You're like, okay, well, I'm down, whatever the case may be. All right. See, it's playing on that buy stop. Look, now you're above. So now it is June 5th. All right. June 5th. All right. See, look at that. Now it actually hit this one. Now you start trailing your stops. All right. If you want to take the 1-for-1, that's on you. Get out, whatever the case may be. This is June. All right. Now you just trail your stops. Continue to trail. All right. Keep rolling. As long as it doesn't, really when you want to get out, I'm going to be honest, is if it touches this EMA and closes below, you want to get out. All right. But from right here, see how that is? Now you at 1.5. Where's 1.5? 1.5. Just do 1.2, 1.52. All right. So now you're at 1.52. All right. See how that's a lot less stressful on your brain? Is you place this buy stop order and you walk away. Next day you look, okay, it ain't in yet. All right, boom. Oh, okay, I'm in now on the 2nd of June. All right, you hit your one to one, and now you at 1 to 2. Now you at 280 pips in profit right now with and you trailing your stops. All right. So with that being said, you just keep letting it ride. And I know it's easier said than done if you're coming from scalping, and it takes some little patience. And now look, all right, this is where you want to get. This is basically where you wanted to get out right here. So guess what? If you trailed your stops, now the caveat or the warning to this is that you will give back some profits. You won't give back all your profits, but you'll give back some. So if you look right here, you was at 280 or 300 something 72 pips, which was you was at a 2, a 2 to 1. All right. But now if you get out back here, you was at a 1 to 2. So you gave back 100 something pips. But here's the thing. That's why I say trail your stops. All right. If you look back here, you seen that it clipped back. All right. You followed up right here. I'm sorry, right here. I wouldn't have came up. I would have just let it ride and then until it got to my 1 to 5. All right, let me see if this. Let me move this out the way. I wouldn't have moved this back at all. So if you at 1 to 5, that's when I would have started. I would have been at break even at 1 to 1. Then at 1 to 5, I would have started really trailing up. All right. So if we right here, I'd have probably put it where we at. I'd have put it right here. All right. That's where I would have put it at. All right. So if you look, we still going. And guess what? Put another one up. I wouldn't even put it. I would have basically got stopped out right there. Same thing. So I would have took that same L, like if you were taking, you guys were taking it. All right. So that's pretty much plain and simple. All right. That's pretty much plain and simple. Let's look at some more. Let's look at another pair. Now keep in mind, I'm just showing you from hindsight right now how to do this. All right. So I'm just picking it and choosing it. All right. So let's go to a more clean pair. See right here, this right here, and this is why I have this one over here. All right. Let's see if we can find that one to help you save. It'll help you save where you're at. All right. So save you from getting in the trade, should I say. All right. So if you look, you got, all right. And sometimes this happens like this. All right. But if you look, you have to look. You can take this trade, but if you look right here, all right, the previous high, all right, you don't want to take this, all right. Even though you got your ones right here, but see look what it's doing. It's playing with that previous high. You don't want to mess with that. If you close to a previous high, leave it alone. All right, and this is not a clean pair right here. All right, so let's look at, I don't know, let's pick another one. All right, well, look at that one. So let me show you a pretty good guideline. All right. If you look back, let's look back right here. Is this June? Yeah, June. All right. So it crossed back over, right? Crossed back below. You're still bullish, or whatever the case may be. You can come back here, put that right there. All right. Let's look. Let's wait. Let me zoom in. All right. You got your first one. All right. Null and void. Null and void. No. Look at that. Here's your first one. All right. All right. Here's your second one. This one you just got to take the chance. It reversed, but here we go. Look. And this comes with knowing your pair. So it's 111. So let's go 20. Let me sorry. 0.20 times 111. All right, times 111. 22. All right, now let's move 22. Let me do 22 pips. That should do right there. I ain't got time to zoom in all the way right now. All right. And you do 22 above and below. Let's put that buy stop there. All right. The best thing to do, like I said, is to every time you want to take this trade, it resets. So if it comes below, then it comes back, you reset the two candles. You reset the two candles. All right. Comes above. All right. All right. Below, reset the timer. All right. Not on the retrace. I ain't showing you that right now. Okay. I ain't showing you that right now. All right. If you look, let's do 1-to-1 so far. And I'm gonna tell you this strategy works well with the JPY. All right. So you got your with the JPY pairs because they trend so well. All right. Buy stop. All right. Go from there. All right. End the second day. All right. Boom. Look at that. All right. Now we look. We at 1-to-1 now. Our stops are in break even. All right. Let's go to 1-to-5. Oh, excuse me. All right. Look at that. So rule of thumb, right? Rule of thumb. Let's move this out the way. It's the carry your stops with the ATR. See my ATR stop right there? I mean, with the SMA. All right. You still going? All right. Here's my stop loss right here. All right. Still going? Here's my stop loss. See how it continues to go up? And sometimes you will get stopped out. That's the part of the game. You might not, it might stop you out and continue going, and now you missed the big, huge trade. But guess what? You still made it. All right, look at that. Still going. Hey, next 2 days, look at that. Now we currently at our stop loss. See, we all the way up here, but our stop loss is in profit at 300 something pips, right? All right, so let's keep moving. Let me see when it's going. And this is July, so July 5th. We're gonna stop right there. All right, so right now our stops are right here. All right, so currently our stop is we had 403 pips. So here's the thing. All right, we entered this trade on June 10th. It is currently now on this date right here, 11th of June. All right, 11th of June. Let's go one more day. See if it don't. All right, tomorrow. Today is yeah. All right, see where we at? Moving this stop up. All right, so pretty much plain and simple right there. Pretty much easy. Let me bring this back up again. Oh, let me go to Euro J. What in the world? Euro USD. All right. Hopefully I explained that to you well. Where's my handy dandy? I guess not. Well, no, let me pull it back up for you guys. Sorry about that. All right. Here we go. Booyah. All right. Make sure you copy this again. Again. All right. The buy stop entry, place a buy stop 20% above the 5 period ATR. All right. To find that 5 period ATR, you go down there and it'll be 20% times 5 period ATR. All right. Just remember that. All right. Remember that. Pretty much plain and simple. You can look on every single pair and you can find a setup. All right, you can find a setup right here. This was an ugly setup, but it was there. All right, you can find a setup right here. Look at that. And you see 1, 2, you do 20% of the moving average, come up, boom, boom, continued up. That's JP1 pair. If you look right here, you can tell this is probably not this is an ugly pair. You'll be continue to get stopped out. So you just have to remember, hey, when you have the highest high, all right, just look, consolidate. If it's playing around in this consolidation, right? Leave it alone. If it's playing inside of here, oh my goodness, come on. If the price is inside of there, why are you trading it? You know what I'm saying? Why are you trading it? Look at here. 1, 2. All right. Come up right around here. boom, boom. All right. You can see it on every single one of them. You can see it on every. Yes, it's all you doing it hindsight, but yeah, guess what? You can go back and practice this. Look, 1, 2. Come up here. You probably got stopped out because of this wick, but now it's continued to go up. That's the MCD JPY pair right here. All right. Let's see, all the way down here. Look at that. The highs of the high. All right. This one didn't touch, so we were right here. Boom. Look at that. You know, if you would have came back, it came back to entry. Boom. Continue down. All right. And this was right here on April 10th, and now look where we at in July 16th. So that's pretty much the gist of it, guys, about how you can swing trade. Just imagine on some of these trades, you made 4 or 5, 600 pips on the trade, and you have multiple pairs you can look at. Once you get good at it, you got multiple pairs you can look at. So if you're risking right, you can place these trades, monitor them once a day at 5 o'clock p.m. Central Standard Time or whatever time frame you're in, and go about your day. Just think about it. To make 500 something pips on a trade, trying to scalp or whatever, it's going to take you months to make 500, to even find, even if you come to the market at the right time. See what I'm saying? All right. Other than that, just remember, this is the battle room. All gas, no brakes.